The fox invites the stork to dinner, serves soup in a flat, shallow dish. The fox eats, the stork goes hungry. That's an Aesop fable. And I'm going to use it to explain something that happened in a room full of statisticians in 2004. Something that still affects every national economy, every developing country, every community whose land and water is being degraded right now. And I know there's already a lot of commentary about GDP and national accounting, and I'm entering this discussion to talk about weapon systems, specifically how weapons got a shelf and ecosystems didn't. So let me be clear about how national accounts works, at least in regard to why weapon systems were moved to becoming a fixed asset. So when a government buys paper bags and cleaning supplies, those are called expenses, spent and gone. That's classified as intermediate consumption. And that's where weapon systems used to be, at least before 2008. And then when a government buys a commercial oven that runs for 15 years, well, that's a fixed asset. It goes on the balance sheet. It counts as productive wealth. Now, here's where it gets interesting. Now, under the old rules, the 1993 SNA, or System of National Accounts, which guided our GDP or the strength of our national economies. Now, in that older version of that older accounting methodology, when a government bought a warship, it was treated like the paper bags, spent and gone. However, under the 2008 rules, rules that perhaps coincidentally coincided with the 2008 financial collapse, the SNA 2008, that warship was no longer a paper bag or cleaning supply. It became the oven. It became a fixed asset, depreciating over decades, adding to measured GDP every year it sits in port. Nothing new was produced for citizens. The accountants, they just changed which shelf they put the warship on. So in February 2004, the post 9/11 neocon world, the advisory expert group voted on this, and the proposal passed 15-4. And the United States Bureau of Economic Analysis pushed for that change and had already begun to implement it unilaterally, even before the vote even happened. Surprise, surprise. Now, the rest of the world was being asked to adopt what the US had been practicing. Now, some people inside the process, they pushed back. Andre Vanoli, a French national accountant, wrote that weapons are not economic assets, they are political assets. Their function, properly understood, is destruction. And the moral accounting tradition, one rooted in the experience of the world wars, understood that. Another, Fadil Mahdi of the United Nations Economic and Social Commission for Western Asia, was even more direct. He said, military expenditure does not generate tangible production. And for countries that imports weapons on credit, the GDP goes up. However, the debt accumulates and the domestic value added goes down. Now, Germany's statistical office said that the change would substantially affect GDP and government net lending and should be avoided as a major conceptual break. But they were too outvoted. And then the same revision cycle that capitalized tanks also made a decision about environmental accounting. Ecological accounts had also been on the table since 1993. UNEP, the World Bank, Agenda 21, all pushing for forests, fisheries, freshwater systems to enter into the core accounts. The UN's own 1993 SEA, the SEA, the System of Environmental Economic Accounting, said plainly, it has not been possible to reach international consensus at this time for a fundamental change in the SNA. So weapons got a shelf, forests didn't, oceans didn't, fisheries didn't, soil carbon didn't. The Stork's jar was acknowledged, studied, noted, and set aside. The critique of the asset boundary must become the critique of who draws it. The critique of who draws it must become the critique of political economy, because that is where value, capital, property, and accounting systems organize its power, which of course is the point. The issue is not a technical methodology. The issue is how technical language is used to manage statistical legitimacy while dispossession and extraction gets reinforced. So for small Pacific Island economies, for example, Fiji, Samoa, Tonga, that imports military hardware and credit, SNA 2008 records those weapons as capital formation. And so GDP ticks up. The balance sheet, it looks stronger. What doesn't appear, however, is the environmental, the healthcare infrastructure. They're not built. Ocean biodiversity, the real economic strength of small Pacific Island states remains unaccounted. The reef or deep seabed that the military or extractive industries are degrading are given greater value than sustainability, sustenance, and stewardship. Now that is what intermediate accounting is designed to correct. So coming back to the question, who decides what counts as an asset and in whose interest is the boundary drawn? Now, the World Data Organization was just inaugurated in Beijing on March 30th, 2026, just a couple of weeks ago. And this is a brand new table, different guests, and this time the stork gets to choose the vessel. So if you want to go deeper on this, the full article is on my Substack, onibaba.substack.com. Subscribe, share it. And if you're feeling generous, buy me a coffee. I'd appreciate it. Thank you very much.